trading successfully with binary options, what you need to know, and I'll cover almost as much as I can for you, and which I believe are the most important tools for you. First of all, we will need to make a TradingView account. It's completely free. The way to do this, you just go to tradingview.com, click join for free. You sign up through any of the platforms here, or you can create an account just like this and you can sign up. After you've done that, I will log into my account so I can show you what you will see. You'll come to a screen which looks like this. These are where the expert traders post a lot of their theories and their ideas. For instance, you can see, this person here, TNT Sunrise, has given his analysis of the gold, the asset gold, and what he believes will be happening. You can also see different trades by people down here as we scroll through. If you'd like to implement any scripts, you just click scripts, which is up here, and then you can see, what type of trading you'll be into. Would it be long term, short term, using pivot points, so it's catching the highs and the lows of the market, and then you can just search whichever one you like and you can select it there. So this is under scripts. What we'd like to go to is charts. What was a blank chart? And what we're going to need to do is go to indicators, go to pivot points, and then click high, low, and they will be added to your chart. So they look just like that. So those numbers that you see, which were here before, I'm going to show you one more time. Pivot points, high, low, and we'll add those in. So this will give us a basic, really simple look into support and resistance. What support and resistance is the peak, the highest or the lowest point on the chart of the candlesticks, because obviously when they turn around, they've hit some sort of resistance in the area. So that means that, like an analogy, these candlesticks are trying to break through the ceiling. They don't have enough power to hit through the ceiling and go to the next floor. So they hit the ceiling, they come back down, and they hit the floor again to try and bounce back up to hit the ceiling. And if they have enough momentum, they'll either break through the ceiling or they'll break through the floor. And then they'll move down a level or they'll move up a level. Really simple. But how we actually find support and resistance, it's really simple. We go to this line here. It's called the trend line. We find an area with numbers which look to match up in the line. Okay, so these look like they're matching up in the line. We could say these are matching up in a line, or we could, zoom out a bit and we can say, oh, these are matching up in a line. And what we'd do, so for instance, over here on Euro USD on the hour chart, we can draw a line from these numbers to the next numbers and all the way across to the next numbers, and that would give us the support. So it's bouncing off the floor, as you can see. Another example of support and resistance would be the resistance, which is up here to here. Okay, and as you can see, that this is when Brexit happened. So there's a huge buy in the euro. The euro has become stronger. It's broken through the resistance and it's actually continued its trend up before it lost momentum and it started to fall back down. Now, if we look at the chart, we could then possibly, draw some more support and resistance. But currently looking right now, I can see there's some nice support levels here. And we can also see some nice patterns here. So just like that, and you can see it broke through, and that would have been a nice area to buy once it actually broke through the line here to go up. So these lines often get tested and retested. So I've got some photos to show you, some nice examples of support and resistance levels and support and resistance lines. So here we are on the Euro USD. You can see that there's a nice pivot point here, also here, and you can see what a pivot point looks like. It's a sharp turn in the market. It's either going up or down. And what we do, we just draw a line which connects all these pivot points. It's really simple. A lot of the time people say that it's quite hard to find the pivot points. They don't know where to look. And that's exactly why I told you and mentioned in the beginning to go to indicators and add the pivot points. It's a little feature that people don't actually know about. But it indicates the pivot points for you. So all you have to do is just draw the line where the numbers are, and that will indicate what area is the market's turning at. Another example of resistance could be right here. We just want to line them up like that, and we have a nice line of resistance. You can see it broke through the support, which is here, and that's why it started to go down. So it had enough momentum to break through the floor, and it continued going down. Okay, so going back to this here, it's really simple. This is a really nice picture drawn. It's on the day chart. As you can see, it's the 8th, the 9th, the 10th, 13th, because that would have been on a weekend, so it skipped that. But as you can see, there's not much to it. Drawing these levels will indicate to you what's most likely to happen with the market. So for instance, all we need is 1, 2, 3, 4. Once we've got those points, we can then predict the movement of the market. So for instance, if we just had up to here, up to the 13th, we can see that it's hit the support, okay, and it's going to continue in an uptrend. So what we're going to do, we're just going to put a buy-in around here maybe for a day or by the end of the week, and that would have gone all the way up, okay, and it would have won. Once it hit the next line of resistance, you could then say, okay, I'm going to place a down trade for the end of the week, or, you know, for the end of the day, once it hit this line here. And then it would begin its reversal, and then you could profit like that. And you can see you can do it quite a few times, but eventually it will break through one of the lines. It will either break through the bottom, which is a support, or break through the top, which is a resistance. And once it's broken through, you can then place a trade in the direction it's gone. So if it's gone down, you'll place a put, which is a sell, to continue in that direction. Or if it's broken through, you'll place a call, which is a buy, to continue going up in that direction. So this is a really easy way, just doing some chart analysis to actually see some good opportunities to buy in and sell. But apart from actually drawing lines on the peaks, the highest and the lowest parts of the chart, we can actually draw horizontal lines, and these give us the resistance levels. So these levels will date back 10, 20 years, a day, an hour, depending on what chart you are. These levels will always be retested, so it's always a good idea to leave these lines on your chart, because they will come handy in the future. So for instance, currently, if we look, what we're trying to find is our numbers that are on the same level. So we'll hover this line here till we see some numbers which are at the same level. So we can see this is at the same level, this one, and this one. If we hover our line, they roughly, more or less, all meet up. So we're going to press Alt-H. That will give us a nice line here, and we can use that for future reference for trading. We can also do it here. Okay, Alt and H, and that also gives us a nice line for future reference. And as you can see, it's broken through this, it's used it as support again, it's come up, used the resistance, used support, used resistance, support, it's broken through. So these lines get retested a lot, and people actually underestimate the power of these lines. Okay, so if we went to a 1 hour chart, for instance, and would look for some lines which line up, we can see, over here, this one here, this one here, it's broken through, but it's rising back up. So for instance, we could expect if this chart, if the euro against the dollar comes back down, we could expect a reversal back off the line there, just like that, as it's done so before. Okay, so that's one example of doing that. And as you can see in these photos, they explain just like this. Once it has enough momentum to break through the level, it's most likely to continue that trend. And often the saying is that old resistance, so once it's broken through, becomes new support, and old support becomes new resistance. So if it breaks through the support level, it will then use it as resistance until it has enough power to break back through and use the resistance as a support level. Likewise, if it breaks through the support, it will use it back as a resistance level. And these lines, you know, they date back a long time. So for instance, if we scroll back far enough, okay, we can see, sure enough, these levels have been used. This is September 2003. This exact line has been used a few times. You can see here, there's a lot of resistance. We keep scrolling back. Been used again back in 1999. Okay, and it just shows you 1998. These keep going back, that you should never delete any of the lines you draw. Doesn't matter if it's on a minute chart, an hour chart, they will always be used again. And you can see 1999 back up to 2016, so that's 17 years later and these lines are still being used, which is amazing. So that's why I always tell anybody, if you're drawing on the chart, leave your lines on there. I've only deleted the lines because I want a fresh chart, and this is a chart which I don't use. All my other charts are saved here. Okay, so that's just a basic, simple, explanation of support and resistance. It's really simple to get the hang of it. I'm just going to show you these photos here. Okay, so as you can see, it's support, resistance, they've broken through. That's now support, it's broken back through support, hit the new resistance. Okay, so it keeps doing this. We're actually going to draw some support and resistance levels for you, so you can actually see how simple, how quick and easy it is to do. Okay, so for instance, what we're going to do, we're going to go to the 5-minute chart, and we're going to look. If we can't find any levels, don't force it upon yourself to try and find one. If you can't find one, just leave it. As you can see, this line matches with this line, will match with that, and match with this. Perfect example of a resistance line there. If we also go back, we can see that these match up. Okay, obviously this has fallen on around the, trying to find the exact time over here. So basically what we're looking to do, if we're drawing it on the minute chart, so the lower the time frame, the less accurate they become. It still works, as you can see, but what we aim to do is keep it on a higher time frame, because as it's the average, it's more likely to happen say during the 5-minute time. And if you're on the 5-minute chart, what you'd be looking to do, so if you were expecting it to hit this up here, I'd place a 15-minute trade or a half-hour trade if we're looking at support and resistance like this. Up here, it's hit the line, it's coming back down. I'll place maybe a 5-minute trade because I'm expecting it to come back down, hit this line and go back up. Okay, so that's a really simple example. We're going to go to a different currency, say US dollar against the Japanese yen. We can't see anything here, it's this huge steep buy. So what we're going to do, we're going to leave that. We're going to try a different currency. We're going to try silver, which is XAG/USD. Okay, and we can't see anything here. Maybe a resistance line up here. Okay, and we're looking around, and there's not too much happening. So what we'd do, we'd go through the time frames, because sometimes it might not be as obvious that there's some support and resistance going on. Okay, we can see from up here down to here. There you go, that's a resistance line. And we could also draw, we could say that one like that, or we could say there. Okay, so it's bouncing between the support and resistance. It's shot through, it's broken through. So what we'd do, we'd place a call to continue going up in this way in the trend. What I've done here, I've just listed the time. So on a 1 minute chart, you'll be looking for a 10 to 15 to 30 minute trade. On a 5 minute chart, you'll be looking for a 30 to an hour long trade, the expiry time. On a 1 hour chart, you'll be looking at end of day trades or an hour trade, depending on where the candlestick is. On a 1 day chart, you'll be looking at end of week, 15 days, or a 30-day trade, which are all available on the stock pair platform. They have loads of expiry times, and that's why it's good. But I hope you understand what support and resistance is. To go over it one more time, really simply, it's just a compression with the candlesticks, which indicates that there's some sort of resistance going on there. We don't know what this resistance is. It's some sort of imaginary thing, but the market, the computer says that there's resistance there. It can't break through. So what it's going to do, it's going to hit it a few times, and it's going to come back and try again at a later date. So that's why we put the line in, so we know that it's going to try and retest this at a later date, because it will. We can see here there's a nice line. Okay, so now what we have, you can just see simply that this is going to rebound between these. So what we would do essentially is wait for this candle to either break through the bottom line or the top line. You don't have the time to wait for that, so what we can do, we can just add an alert on the horizontal line. There you go, we've created one, and we'll also add an alert on this horizontal line, and we'll create one for that one. Okay, so there we go, we've added 2 alerts on each of the lines. So now this means you're free to go and check a different chart. You can leave this chart and it will tell you, even if you're not on the page, that there's an alert. You can set it to text you as well, which is quite cool. But yeah, just one last recap. You're looking for a trend, so essentially a pattern. If you can't find a pattern, leave it. Don't force yourself to try and find a pattern. If you do see one, draw the lines. Keep the lines on the page. I can't stress how important it is to keep any indicators you put on the page, as these will be used in the future, at some point in the future. We're not sure when. Maybe in the next hour, in the next day. It could be the next month that these candlesticks will come back up, and they'll use the lines that you've drawn. It's really important you do that. Okay, when we're doing horizontal lines, a really quick way, just press Alt and H and it'll put the line in. And where we want to put the line in, we just want to line up the crosshairs and just hover and look across the line. Are there any numbers which are matching up as we're going? Like here, you can see. So here, they're matching up. Here, you can see it's hitting it here. It's hitting it there. Here, so there's loads of levels. If you really look into it, you can find a lot, and you can use it to advantage to trade. Okay, in the next video, I'm going to be giving you some indicators. I'm going to show you how to add them into your charts, and then this will be sort of giving you some signals to actually take the trades. What we want to be doing when we're using the strategy is only focusing on gold and focusing on silver, because these are the most profitable commodities or asset we can trade on. Any other chart, there'll be too much fluctuation and the signals won't work. Using gold or silver, it always moves in a strong direction. If it moves in one direction, it's going to continue moving in that direction. It's not going to change. Okay, so it's really important that we do this.